everybody, we're back. We're going to look at a few more things, and it's Graph and
Jade.
Oh, nicely done. Jade knows her name. Now, what last time we discussed a little bit, we just went through our bear trap, which we believe has taken place. Nice big splash. And I can tell you, everybody in the market calls this a bear trap. I hope they all understand, that's the fear and greed, that it's this bear trap. That's my opinion anyway. We can see if it's something else. I believe this is where we are now, and we're going straight up.
But isn't this the bear trap as well?
Yes, in essence. However, 1 second, I'll show you. We are in sideways, okay? You see sideways?
Yep.
Now sideways, as I mentioned, how many directions are there?
3.
3, what are they?
Up, down, sideways.
Okay, now I call this sideways accumulation. Now, I call up is called a bull run, down is called a bear market. Okay. Now, sideways can be called accumulation, i.e., the gathering of more coins, or distribution, the giving away of the coins. Okay. Now, what you can notice from metrics, we should maybe get one up. I might find it in a minute. Write it down, and we'll get it in a minute. Might not be able to find it. Whale accumulation. I'll explain whale accumulation, guys. I'll get some charts for you for whale accumulation later. I'll explain it now. At the moment, whales are buying more Bitcoin. Okay, they sold Bitcoin up here. Okay, they're buying. They bought here. They bought here. Now they didn't buy here. This was retail caused this bear trap. Okay, retail got bored. Retail were buying sideways and it wasn't going up. And then it went down a teeny tiny bit and they just panic sold. And then retail traders had something called a stop loss in. If it goes below 58, for instance, out of the box, they would just sell. So what happened was we had everybody selling electronically. Price goes down. Some people getting scared as price going down, they sold. And we had something called liquidations. Okay, now liquidations when people who are gambling lose their money. So they bet on the price doing something. In this case, they bet on it going up. And when you gamble on price only has to go down a little bit and they take all of your money. That's why it's called gambling. Whereas if price goes down and I have my Bitcoin today, tomorrow I have the same number of Bitcoins, it's just worth a different price. And I don't care because Bitcoin goes up. So your question was accumulation, and I get distracted. Oh, your question was, why is it not the end? Okay, which is a question a lot of people have been asking, and we'll go back to that graph again. Okay, so we definitely went through all these emotions. Yeah. So I can understand where you would see that coming from. Now, from my perspective, another big reason why this is not, guys, this is meant to be a video about something else, but it's gonna be about this. We'll do the other video later. We answer questions on this channel. Now, this is called a blow off top. Yeah. Straight up, pretty much straight down. This is called the bounce of hope. People are like, yay, it's gonna go back up. Now, we did not have a blow off top. No blow off top, okay?
I see.
We have retained market structure. We went down. Now, I know this was hard for a lot of people. We went down, I'll measure it for you here. We went down 55%. That's not a lot for Bitcoin. 55%, not a lot for Bitcoin. We've had bear traps that were 55%. Our drop over here, let's see. Whoops. 38%, okay? And we bounced straight up to a lot of it. Now, focus. I like to say focus a lot. Market structure is bull market support band. Okay. Well, we're currently under it, which is we need to go to the weekly for these settings. We see the bull market support band. So as I explained in the last video, do you remember the last video?
I do.
We talked about bouncing off this band. Now, if we are above the band, we can all be very bullish. We are not above the band. I can understand why people would think we could be going down. Okay. Now, what we can show people is the debt cross, which I had you write down in the last class. I call these classes. Now, so debt cross, this is a debt cross here, okay? when the red line goes over the green line. Do you see?
Yeah.
This is called a golden cross. Okay, now we're having a deck cross right here. I'll zoom in a minute and show you. Now, the deck cross is media tell you its price will go down. Okay.
Mm-hmm.
In fact, this whole line or band is previous price history. So it's showing you the price already went down. Okay. This is the deck cross. Yes. Now price went up.
Yeah.
So we had the golden cross. Okay, but price still came straight back down. So people to get excited here. So we have a deck cross at the end of every cycle. So we will always have a deck cross over here. And we'll always have a golden cross, well, after the bear trap.
Mm-hmm.
Now, what we've done in the past, I have them circled in another graph. It could be this one. I have a lot of circles, actually. I was showing some charts to someone. I showed some people the other day who were mentioning deck cross, how okay it is. Let's see, there's not circled here. We can't see one. We want to look for our bear trap anyway. So where was our bear trap? Here. So you can see cross, 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 cross. During accumulation, price is going sideways. So you can have a lot of these crosses.
Mm-hmm.
So it's not as relevant during accumulation. But always with our bear traps, we have had a deck cross. I went back every year and I checked all the charts. I don't have them drawn in there. Let's see, I want to make sure we get the... So the deck cross is green going under the red. Whoops. And let's see. Here's a golden cross and then price went up. Great. Now we had green going under the red here and we immediately came back up. Here we also went under the bull market support band like we are at today. And price went straight back up and bounced over it. Now, if we fail at getting past this bull market support band, yes, I would think we could go down. Now, the issue is, let me see if we move to the monthly, for instance. No, it's not that great because we're way over here. I wanted to go back. What has happened is so the bear traps, in every bear trap, we've always gone under the bull market support band, but briefly. If we can come back up at the speed I expect us to, we'll be back on. Everything will be fine. Some people are worried that we're below this. We're actually above the 500-day moving average. Let me see if I get you the 500-day moving average. I don't use these moving averages a lot. Let's see, moving average. Oh, we gotta remove something out of the way. Take my cloud. Where's the cloud now? Nice. We'll put in the 500-day moving average. Or is it the 50-day moving? It's the 500-day moving average. We'll just put in moving average. Moving average. Now, that's the wrong settings. 1 second, everybody. Chart is on the weekly. We go to the daily. 1 second. Whoop. Now we put in 500. Let's hope this is the right one. I don't use this one a lot, but let's see. Ben Cohen has it. Now it's the wrong one. Let's see. Whoops. 2 seconds, everybody. Weekly. Didn't prepare me for checking this line, but I know we're there. Let's see. Bang. 50-day moving average. And we can see in the past, when we've been above that, we've been in good shape, but we came down in the bull runs. Okay. Now, other reasons why we can't go down are everyone who's investing. So currently we are in the stage emotionally. I'll show you the emotion graph again. Where is it? We already have media attention. Okay. The whole planet is talking about cryptocurrency right now. Now everyone is what called stupid money is getting ready to play the game. I'm talking to people all the time who are just buying now. And of course, I'm telling them it looks like it's safe to buy and they make their own decisions. But for me, the graph has only done everything it was supposed to do. It was supposed to come up and come down to 40. It was supposed to come up and come down. This, from my perspective, is nothing but accumulation. For it to be distribution, one, I would expect there to be a higher volume as well. You see the volume down here.
Right.
So the volume, there is nobody playing the game. Okay. Why there's nobody playing? You see. So what I mean by the volume is down. This is you see the way it's higher up here. And we had, of course, a big volume spike when everybody sold. This is volume on the exchanges. Okay. So the exchanges are just where you can buy and sell. Now, there's nobody buying and selling really. If we go to a 4-hour, for instance, spike, we can see like this is, I know you have no idea that it looks like very tiny volume, but this is tiny volume. Okay, there is, you see, this was the spike on the way down.
Yeah.
We would be looking at a lot more volume. People would need to be selling. In order for it to be the end, you have to sell your coins. Okay, you can sell your coins all at the same time. If you sell all your coins at the same time, you won't get the price at the top. Okay, and that's why accumulation and distribution can look the same, because this was distribution here. Okay, they were selling, and we came straight down, but they all bought it back up. They wouldn't have done that if it was the end. It would have been retail. This wasn't retail. Retail were confused. They didn't know what was going on. See, it's widely considered by everybody in the know. Ben Cohen talks about lengthening cycles, where the cycles get longer. Okay, the sections where we go up, and Ben Cohen is somebody. He is a master's in cryptography, and I've learned an awful lot from him. Just his videos. I'm on his Discord. I talk to everybody who watches with him, and I can go through some of his graphs possibly. But to be honest, lengthening, we can measure some of the cycles here for you and show how they lengthen. Let me go maybe to the weekly. These are more challenging questions than some of my previous Jades. Is this the bit? No, we're in the one that doesn't go back to the end. Where's the green one? This one. Okay, yes. Okay, so one, we believe we're accumulating. Two, with the bull market support band, I know we're under it currently, but if we're under for a period of time, we're only barely under it for a short period of time. So as we said, time isn't very relevant. For a couple of days, a couple of weeks below that, we don't have to worry. If we're not above it soon, we could worry. Now, we take the cycles into account and how long they lasted. Let me see. So we can measure from the bottom to the top. Now, let's see, we go back to, another very good point, actually, I'll mention first while we're here on the graph. You see, so over here in 2013, and this is a graph we've been watching quite frequently. I'm going to take out my Fibonacci currently just so you can see something a little better. Now, 2013 is a great place to explain why we're not going down. Now, so in 2013, what we had was a 2-peak cycle. Okay, now Bitcoin has only been around since 2010. Over here, we have another cycle. You can barely see it because the price is so teeny tiny. Okay. One cycle. And then the second cycle. And then this was the next peak in this cycle. So I call these 2 bull runs and 1 bull market. Okay. And what we did, I think we held the bull market support band, but we didn't hold it on the bear trap. You see the bear trap? This is it straight here.
Yeah.
So this was 2013. So there was less money in Bitcoin. Okay. Let me just make it bigger for you. 1 second. And price moved faster. So these, I think these are 1-week candles. This was the down straight back up. Okay. And you can see price pretty much came to this candle here. And this is what's called the spring. This was the mid-cycle low. Okay, I can show you the mid-cycle low on our current one later. Now, And once again, blow off top is not where I would draw the top for where like our current band. We didn't have a blow off top, so I had drawn it from 64. But this one, I took out those and just drew it from these kind of candle areas and this, but only because I'm looking at history and I can see this is where we stopped and we just went straight up. But if I was drawing this live, I may have put it higher up. Now, we went below the bull market support band like we've done in previously. We came back up, we tested it as support, we carried on, and then we had our bear trap. Okay. So you can see, in essence, a lot of people compare the current Bitcoin graph to 2013. A lot of people compare it to 2017. I just compare accumulation to accumulation. Okay. And this is accumulation 2013. And this is the only other time we had two peaks in the cycle, which is why I'm showing it to you now. And you understand we've only had a couple of cycles. We don't have a lot of data. So we can't be completely confident with any of these things. Things can change, but I can only base it on what I've seen. I'm not going to guess.
Right.
Okay. So in essence, taking away price action, exactly. Because you can see this is just really, we just repeated it the same way. It went up, bear trap. And then price went straight up again, in essence. Now, when at the end of every cycle, you see over here, when we saw the end, we come down, I'm going to get the percentage, normally come down 80%. See. There, that is, we go to the bottom wick, that's 82%, okay? When we came down over here, it would have been less. When we came down now, we haven't come down 80%. And when we came back up, the bull market support band is nearly enough. So we've already shown how strong the bull market support band is, okay? We fell below it like I showed you in 2013, you see? Mm-hmm. We came back above it, we bounced off it. Yeah. As I expressed to you in the previous video, every time we've bounced off this bull market support band, we've never gone below that price. Yeah. Okay. We got a second chance to come down. Now we did break this, but that's what I expected us to do. That's the bear trap. It's an exception that I allow. It's happened every time previously. And that was, see, we broke below it. Yeah. Straight back up. That's 2020. So yeah, a lot of people will be more confident if we were above the bull market support band, but I had already assumed we had to go below it because of these things below. And even that's the start of 2007. So this one was the end of 2013 accumulation, went back up, but there was a bear trap before this peak started as well. We'll go down and find that. Whoops. Now, where do we look like accumulation? This is a little harder to draw. We could say accumulation is here. We never went below the bull market support band really ever, tiny bit here. So this obviously could be considered, it's not really 12. That could be, okay, I got it. I have this graph drawn on one of the other ones. We'll draw it in for you now quickly. I get some lines. So this is the blow off top in 2012. This is the whole, it just went really quickly, okay? And then we did another. So again, we won't draw the lines of the blow off bit. We got stuck here. It's difficult to draw on the weekly. I go to the daily, it disappears. Look back. How long? Try it here. 1 day goes to 1 minute, 1 year. It's a daily graph, and it's gone. We'll go back. It does that a lot. Let's see. Our graph is gone forever. Okay. Back. Oops. Now we're going to look at bear trap. Everything is going strange now. Focus, computer focus. Here, we're going to draw on our lines for 2012. Looking for a bear trap before the bull run. And these prices, you see, this is when Bitcoin was $10. Yeah. So I would say this red candle here could be a bear trap. Tipped barely under the bull market support band. Let's see what percentage drop it was. Doesn't look like much, but it's going to be decent probably. Oops. Only 18%. Possibly not as bad as previous ones. I haven't looked at this in great detail. Let's see what else is there. Well, here was the dead cross. Straight down, it could be one. It's so hard to study back down here. Like, look at this green candle.
Yeah.
What's that? Like, I wasn't around in 2012. We're going to leave it alone. I don't know where the bull trap is here. We're in the weekly. Okay, if I went into daily and I didn't prepare a daily graph, because when you scroll back here, it's very difficult to find. We'll look at the daily, write that down. We'll look at the daily graph for 2012 later. I'm sure I've done it before, but it's not here on this chart. Do you believe that we're going up, or do you need more explanations? I know it's easy to believe me. I know it's very complicated.
I think we're good now.
You think we're good. So in what you need really is, we need a golden cross, of course. We didn't zoom into the dead cross. I showed you some of the previous dead crosses. But like, we just had a dead cross here. Lines crossed, but absolutely, you know what I mean? This is not a scary dead cross yet, because that can just turn straight back at any time. Price doesn't have to go very far for us to get the green line above it again. And we go straight back up. Retail gets scared when we have dead crosses. They used to, apparently, maybe. I don't watch any YouTube or listen to anybody, so I don't know if people have been talking about the dead cross. Because usually when we had the golden cross, everyone was like, yeah, price is going up. And I was like, I think we're going to come down here. And you can check when the market starts, we have a golden cross, like we're going to get soon. And when the market ends, we have a dead cross. So people think that's relevant because some of the times it was. But all the times during accumulation, you can just get 1, 2, and 3 right beside each other. Now we got to get another one. So we'll have 4 in this short period of time. And in general, you can at least say the first 1, 2, 3 meant we went sideways, because we went, oh, here's one as well. Oh, that's the same one, sorry. We went from 44K. We'll just do the first 3. Well, first 2, yeah, 3. 1, 2. We went from 44K to 42K. So this cross didn't mean anything. We went sideways. Then we went from 42K to 52K. Now that means if you put on $42, you'd have $52. That sounds like sideways for Bitcoin. Do you know, Bitcoin has gone up from a cent to $64,000. This is just sideways. So I wouldn't be worried about any of those things.
Right.
Also, another good reason why we're going up, I don't have this line here. You see this dotted line here? We haven't shown you much lines today. You see this line?
Yep.
It's the yellow line. So I have drawn this from the start down here of our last bounce on the bull market support band of these candles, not highly accurately. And then you see this wick, I think this wick here, okay? Now, if we go below this line, time to worry. Remember, all the lines are support. We're above this one, this box. We're above this box. We're above this line. And hopefully soon we'll be above this bull market support band. The pattern is playing out the way it has in previous history. We've had the bear trap that we would expect. I've shown you what's happened in the other ones, and I've shown you that this is what happens here. Now, I understand it could be the end, of course, certainly, but certainly not my opinion. And I have all my money left in. I would be taking my money out. I will be taking my money out when we go up in speed. We see something like this. When we go up that fast, I'll be taking my money. We took out some money, and we were late to the party to take money. Everybody on the planet was. We sold some of our alts when Bitcoin was down here, because the alts still struggle. We were meant to talk about what the alts will do in this video, but you got so many good questions. And I've been writing down what the videos are about, because I have no idea what that video was about. I do. Okay, we're going to be right back with another video. Maybe you take a break and focus. Everybody focus.
Thank you for the answer.